Hello everyone, and welcome back to Next Vault. Today, we're diving into one of the most famous and controversial investors of our time, Michael Burry, the man who predicted the 2008 housing crash and was immortalized in The Big Short. But now, in 2025, Burry is back in the headlines with new warnings about the US economy, tech stocks, and what could be another looming financial crisis. So, should we listen to him? Or is this just more doom and gloom? Let's break it down. Before we start, don't forget to like this video, subscribe, and hit the bell so you never miss our deep dives into the world of investing and finance. Section 1. Who is Michael Burry? Michael Burry is a hedge fund manager best known for predicting and profiting from the 2008 financial collapse. At the time, most of Wall Street dismissed his warnings about subprime mortgages, but Burry doubled down, shorting the housing market with credit default swaps. The result? He walked away with a profit of around $700 million for his fund, and his story became the centerpiece of The Big Short movie. Since then, Burry has developed a reputation as a contrarian investor, someone who goes against the crowd, often spotting risks others ignore. But being early can sometimes look like being wrong. Section 2. Burry's warnings in 2025. So what's Burry saying today? In early 2025, filings show that Scion Asset Management, his hedge fund, has made big bets against certain tech and AI companies. Burry argues that valuations in firms like Nvidia, Tesla, and even some AI startups have reached levels that echo the dot-com bubble of 2000. He's also sounding alarms about US government debt, which crossed $36 trillion this year. According to Burry, high interest rates combined with ballooning deficits could trigger a bond market crisis, pulling stocks down with it. And just like in 2007, he believes investors are ignoring the warning signs. Section 3. What history teaches us. This isn't the first time Burry has sounded alarms. In 2015, he warned of unsustainable debt. In 2019, he shorted index funds. In 2021, he bet against Tesla and called Bitcoin a speculative bubble. Some of those calls paid off, but others fizzled. If you had blindly followed every one of his trades, you wouldn't necessarily be richer today. The key lesson? Burry often sees risks early, sometimes years before the market reacts. That makes him both fascinating and frustrating for investors. Section 4. Strengths of Burry's view. Let's break down why people still take him so seriously. Proven track record. His 2008 call remains legendary. Contrarian insight. He's not swayed by hype or media cycles. Focus on fundamentals. He looks past momentum to actual earnings, cash flows, and balance sheets. In a market where AI hype has driven companies like Nvidia to a $4 trillion valuation, Burry's caution doesn't sound completely irrational. Section 5. The risks of following Burry, but let's be honest. Betting against Burry is not always a losing game. Many of his short bets in the past decade have lost money. Timing matters. He can be right, in principle, but early by year. His bearish tone can also exaggerate risks, especially when markets are in risk-on mode like today. For example, in 2023, Burry shorted the entire US stock market with over $1 billion in options, only to close out the positions at a loss when markets rallied instead. Section 6. What should investors do? So should you follow Michael Burry in 2025? Here's the balanced take. If you believe in long-term AI and tech growth, going all in on a crash call might mean missing out on gains. If you're risk-aware, Burry's warnings could be a reminder to diversify, keep cash reserves, and avoid chasing overhyped stocks. For most investors, Burry's message isn't sell everything, it's don't ignore risk when everyone else is greedy. Michael Burry is once again sounding alarms in 2025. Will he be right again? Or will this go down as another false alarm? What do you think? Is Burry a genius contrarian? Or just stuck in a bearish mindset? Drop your thoughts in the comments. I'd love to hear your take. If you found this breakdown helpful, don't forget to like, subscribe, and share this video with someone who's following the markets closely. Thanks for watching Next Vault, and I'll see you in the next deep dive.